And right now, folks, as we do each and every Wednesday at 40 past the hour, we're going to talk to our man, Teddy Kekstadt. You can reach Teddy and you can read his Tiger Forex Report, folks. An outstanding weekly webinar Teddy puts out every Monday morning. Updates throughout the week when warranted, and you get a subscriber webinar in there as well. Check that out under the newsletter tab, that Tiger Forex Report, and he's got a couple great webinars as well. During the holiday season, you're looking for some more education, capitalizing on time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Both of those are $97, folks. You gain access to them. They're right on your account page, and they're there forever, however many times you want to watch it. Teddy Kekstadt, good morning.
Good morning, Tommy. How are you?
I'm doing well, man. How about yourself?
Doing all right. We got almost a foot of snow on Saturday, so it's a winter wonderland in Chicago.
I was thinking about you, man. And hey, how about those Bears as well, man? You guys got quite a little run going. Maybe we'll see the Bears-Patriots in the postseason at some point.
Unbelievable.
Quite a run, but hope you're staying warm out there in that windy city. And how about these hot markets? What do you think, Teddy? Let's kick it off with the dollar if we can. You got some dollar action this morning. Fed's in focus, and I got the dollar index right now at about 99. What do you think in general? What are you looking at right now?
You know what? We made a lower move low in the dollar index today. I think that we're going to keep on creeping lower. We're coming off the last swing high was a lower swing high, and then now we've made a lower move low. So technically, by trend dynamics, we're at least in a sideways to lower leaning trade for the dollar index. I think the pressure is going to stay into the Fed meeting, and you'll probably see a little bit of a boost in certain currencies like the euro and the pound and the Swiss. I think that there's a little bit of room in the U.S. dollar yen trade. If there's any FX pair out there that's probably got some really nice potential over the next few weeks as we head into the end of the fourth quarter, I think the U.S. dollar yen, it's probably like one of your highest odds, highest payoff potential currency trades, if you will.
And where are you? I have it up here right now. We've pulled back from 158. We're at about 155 and change. They were talking, I was going to get there. They were talking about the yen in the Tiger's Den this morning, of course, and gold moving. And so what kind of a trade, for those traders out there, do you have any prospective trades exactly when you talk about the action we may get coming into the end of the year with the dollar yen?
Absolutely, absolutely. So right now we're trading in our critical resistance band, and we popped up above that a week ago. So that last swing high came just short of our upside target level. I think if we get another run up through resistance, I think probably won't take out that last swing high, and if we do, I think it'll be a spike where it just gets above it and falls back. My betting right now, I would say, is that within the next 2 weeks to 3 weeks before the end of the year, you'll see the yen probably down around 151 to maybe even close to 150, especially if there's a Fed rate cut with a leaning bias towards further rate cuts sooner than later in the new year, without a doubt. And especially if crude's trading around 60 right now. Crude gets back down towards that 58, 57, let alone leaning on 55. Yeah, I can see the yen easily trading down around that 150 area, and we have a gap to fill in the range in the yen too. If you remember back in October,
I'm looking at right at the beginning of October, right? That big acceleration.
Exactly, and there's that gap there. Now, in theory, all gaps get filled with the fundamentals leaning towards going towards those levels. It wouldn't be out of I could easily see that by January, especially if you get oil trading consistently around 55, leaning towards 50, then especially with rate cuts, looming, that, you could see the yen bobbling around 150 to 145 in January. So that's a big move, if you think that you're looking at 10 basis handles lower than where you're trading at right now. That's a nice, over the course of a month to look at for a move. I'd say the odds on that one it's a pretty good trade right there.
Yeah, and you're talking about pushing some pretty lofty levels of weakness up there, almost that 160 level, right? Remarkable. At the beginning of the year, what do we have? 158.87, and we just hit 157.88, so pretty close, exactly where we were in that upper boundary. If you see that type of a move, now that would be the yen strengthening, right? That'd be dollar weakness. And is that pushing? And I know you talk to us, I love how you break down, not just the index, but the individual pairs. But if you see that type of action happening, are you looking for that dollar index, maybe 98, 97, something like that from where we are potentially?
Absolutely. I can easily see the dollar index getting down towards that level because the yen is the third biggest weight in the dollar index to begin with. So if you had to just think if all the other currencies stay relatively flat, the yen alone, if it had a 10-handle move like that, should bring down the dollar index towards that level. Now, if you have even dollar strength or dollar weakness showing in these other currencies, well, then for sure I can't see how the dollar index would not be down at those levels, if not even much lower.
No, it makes great sense, man. And I'm trying to figure out, I'm always trading gold, right? The gold report, of course, currencies matter there, of course. I'm trying to, get ahead of the market, and I agree with a lot of what you're saying, whether it's, the cuts coming down the line. You make a great crude's pushing $60, which is almost the upper boundary right now, like you're talking about. Maybe you get some weakness. Do you have any longer term projections on where you might see that dollar pressing out as we come into a new Fed chair even? Because it's amazing. We're going to get a new Fed chair nominated, at least their name out in a month. May's going to be here before you know it. You know what I mean? We're coming into January, man.
Right.
What do you think about the prospects if I'm trying to think about, a 6 month, a 9 month, all right? Is that going too far out? I know I'm pushing you, but what do you think about where we are,
Not at all. Not at
after
all.
that new Fed chair, maybe as we come into, a new regime?
Okay, so let's say that my theory on the yen is correct, okay, over the next month and a half or so. That puts us around the 90, I would say 97 area for the dollar index, and going into, like you said, the next 6 months or so, I could easily see us, let's see, our downside target level is around 94.90. Yeah, I could see us easily getting down to probably 94.5 in the dollar index, by,
Nice.
February, March. Absolutely,
Nice.
Especially if the leaning towards the Fed is very positive towards rate cuts, and a very, especially if there's a big expectation of over a full basis point over the course of the year, which I think that's probably, I would say, almost a given. I'm not going to say 100%, but I think that next year I would be stunned if we make it through next December and we haven't had a full 1%, cut, not to mention maybe a point, a whole 1.25%, including this upcoming December. You know what I'm saying?
You and the president would be stunned, and I think he'd have something to say about his new Fed chair if that was happening, right? That's part of the conversation for sure, man.
Sure.
As in this pressure, I would be shocked myself. You make it great. That's kind of the question I'm saying, right? Am I thinking about this right? And I appreciate it, because it would be surprising, and in my situation, in my mind, I'm throwing it's like, things would probably be pretty bad if that was actually the case, if we had to shift, as in inflation. I don't see that happening. But
No.
But yeah, man, we got some
I
rate
agree
cuts.
with you. We will probably see it coming if it does. It would be a radical shift in some sort of fundamentals, which right now is not on the table.
No, not even close, man. You run it hot, and if it runs too hot, then they'll fix it. But it's not running too hot right now, man. It's not.
Right.
All right, Teddy. Great information as always. Always looking forward to the conversation, folks. Check it out. Tiger Forex Report, outstanding. When Teddy was talking about all the zones on the charts, folks, they're all there in the newsletter every week, and check out those webinars as well. Teddy, I appreciate it, man. Stay warm in Chicago, and we'll talk to you next week.
Sounds good, Tommy. You take care.
Take care. Folks, we're coming right back. Stay tuned.